For me, there's a lot more to trading penny stocks than just viewing the chart. There's a lot of investigative work that goes into penny stocks when I'm making a buying decision. I'm going to give you a glimpse of what that looks like coming up. What's going on, everybody? Welcome to Own the Chaos. My name is Brad, and I find a lot of success in trading over-the-counter penny stocks. The volatility here is what I live for. I do this every day for a living, and I probably will do it till the day I die. So that I created this channel in order for people to learn and grow and find the success that I have. And I've also created a free platform for anybody to join. It's absolutely free. You can check the links down in the description. It's called We Trade HQ, and there's almost 3,000 people in there learning and growing and celebrating each other's success, not just with penny stocks, but if you're interested in anything else, whether it be options, other big board stocks, Forex, you name it, no matter where in the market that you're trading, We Trade HQ is the place for you. So go check it out. And what I'm talking about tonight is fundamental trading. So I told you guys that yes, charts have their place in penny stocks. They're very important. You know, they can help you identify oversold or overbought situations. Maybe something's overextended. You can find supports and resistance to determine good entries and exits when trading penny stocks and really anything in the stock market. But what I think is more unique to penny stocks and over-the-counter stocks in general is that investigative, fundamental type due diligence that you really have to perform if you're looking to make a buying and or selling decision on any over-the-counter or penny stock. In my opinion, this is how I find success. This is how I really kind of uncover what's going on within the company. So I'm going to show you a little glimpse of that. This is probably going to be a multi-part type of series because there's so much involved in it. So I'm just going to show you one part of that, kind of like a first step, if you will, in investigating what to do and as far as like your due diligence and really should you pay attention to this stock or not. I'll share my screen on the platform that I go to first, and then we'll just kind of go from there. All right, guys, so when I'm doing my due diligence, the first thing that I'm going to go to OTC markets. Let's just say that I'm looking at my scanner and I see some unusual volume pop up on something and I want to take a closer look. What is the health of this company? Do they have a decent share structure? How do I find all of that? Well, it's going to be at otcmarkets.com. This is where they provide all of that information. It's basically the Facebook of OTCs, if you will. Each company has its own profile designated for them specifically, and then you can review filings. Again, like I said, share structure, just their overall profile, what are they getting into, and that sort of thing. And the first thing that I look at when I'm looking up a particular ticker is their status symbol. So what I mean by that is there's certain symbols that are designated for OTC stocks that will let me know whether or not they are current. Maybe they're only behind a little bit on their filings, or maybe they're seriously delinquent and it's something that I perhaps may want to consider staying away from. There's also a caveat emptor status that we'll get into in just a little bit that says, you know, buyer beware, or maybe they're doing something illegal, something that basically says you might want to seriously stay away from this stock. There are also OTC stocks that get rewarded for going above and beyond the standard reporting system. We'll go over those as well and what all that means when you're doing your due diligence. So the first thing I want you to take note of, as I was telling you about the status symbols, you'll look here, you'll see when you're looking up a ticker, you'll see pink, you'll see a yield sign or a stop sign. Now, first off, the pink open market provides a brokers for a platform for transparent trading and execution in any security. There are no official standards or disclosure requiremements. So basically, this is your non-reporting type of pink sheet. So what that means is that they don't necessarily have to report to the SEC. Maybe they're, they're not ready to take that step to do actual SEC filings. And so that's what that open market pink sheet status means in that regard. The next one is going to be pink current information. That's going to be companies that are SEC reporting. So they have this pink symbol there, and then you'll see that they have SEC filings that they submit on a regular basis to ensure that they sustain that current status. The next one's going to be a yield sign. So this yield sign designated for companies with financial reporting problems, economic distress, or in bankruptcy that make the limited information they have publicly available. So what that means in a nutshell is that maybe they have a filing that is not, maybe they're just missing one filing or maybe two filings, something that's 6 months out or less on their filing or reporting system. And so this isn't necessarily to deter you away from this stock, but it's just to let you know that they are a little behind on their filings, and maybe there's something in those current filings that you would want to see before making a buying decision. The next one is going to be a stop sign. So the stop sign that you'll see on some of these tickers means that the company is seriously delinquent. Maybe they're defunct. Maybe they haven't put out a filing in years. This is a designation reserved for those types of stock. Now, again, this isn't something that would necessarily deter me from buying a stock, but it's important to look at the stop sign signal when I am making a purchasing decision, because if I see the stop sign and then all of a sudden filings show up on this platform, then I may start to get a little bit excited and say, okay, why are they all of a sudden trying to get current? And what's going on here? Are they looking to perhaps merge into a company? In order to merge into a company, you have to get yourself current. So people get really excited when things start moving on something that has a stop sign designation, especially if it hasn't been moving for quite some time. Now, none of these symbols are directly going to tell you that you should buy or stay away from a particular ticker. These are just useful tools to be able to say, hey, guess what? They're not current, or maybe they're trying to hide something from you, or maybe they haven't been doing business for a while and they're probably not worth anything. So this is very useful when I'm doing my own due diligence on the fundamental side of things, and it's something that I look at every day. Just to give you an example as to where that might be designated on a ticker. So if I look at something such as, let's just say HIPH. It's one we looked at recently. So HIPH, you'll see that designation right here. So pink, current information, that means that they are SEC reporting. And I can go here and look and see that for myself, that they do have SEC filings here. The next symbol that I want you to take note of is going to be the caveat emptor symbol. So if I look up something such as DNAD, and I look at DNAD and I see this skull and crossbones here, that means caveat emptor. And what caveat emptor means is that they've designated this symbol for all the wrong reasons. Perhaps they're doing promotions without disclosing them publicly, which is a big no-no among publicly traded companies. As stated here, it could include news releases, spam email newsletters, whether they are published by the issuer or a third party. That's the important key there, or a third party. That could get a good company in a lot of trouble for all the wrong reasons. And that it sucks, but it's there to protect you as the investor. There's other reasons here that would prompt a caveat emptor status to be slapped onto a particular ticker. And it's definitely important to take note of. For me personally, it's not going to deter me 100% away from investing in a stock. But having said that, I've seen this many times where a caveat emptor gets tagged on something, and it could spell a lot of trouble for a particular ticker. The last two that I look at is OTCQX and OTCQB. Now these symbols are directly related to companies that have gone above and beyond the standard type of reporting. A lot of the companies with an OTCQX designation are priced well above 5 cents, but they have been known to fall below that. An OTCQB designation is just below an OTCQX. They still go above and beyond, the standard type of reporting. But one of the keynotes to take here is that OTCQBs must meet that 01 cent or 01 bid test. So they have to remain above a penny in order to sustain that QB designation. All right, so that's one of my first steps that I do when I'm doing my fundamental due diligence on any particular over-the-counter penny stock. Now, I know there's probably a lot of you out there, especially if you've been following me for a while, that are like, okay, Brad, give me a break. We've seen these stocks run no matter what sign is on them, and they really don't matter. But in all reality, they do. If you see a stock that's had a stop sign on forever, and they start putting press release after press release after press release without really trying to get themselves current, it's more than likely that you're going to see a caveat emptor status on there, and the stock could end up tanking. I've seen it time and again where you throw out 10, 20 PRs at a time, and then you don't get your filings together, and then OTC Markets is going to say, hey, you can't do that. And then you'll get a caveat emptor, and then it could really cause the stock to fall in price. It would really mess you up if you were in that. I've seen plenty of instances where a caveat emptor gets slapped on something after hours, and then before pre-market it's already down 50%. So it's a real thing. It's definitely something to be mindful of. And again, this is just that key part of fundamental due diligence that each one of you should be exercising when you're looking and doing investigative work on these stocks when considering a position. Now, again, guys, I know this is probably really rudimentary for a lot of you who've been following me, but I wanted to revisit a lot of this stuff. Some of my older videos kind of make it hard to focus just because the videos are that bad. So I wanted to revamp a lot of this and give you guys a fresh new face, literally, and just a whole new outlook on a lot of this fundamental type trading. It's always good to go back and just kind of go back to the basics every once in a while and just kind of give yourself that refresher. And so I thought I would take the opportunity to do that today. So that's all I got for you guys today. If you learned something, I certainly would appreciate a nice thumbs up. If you're not subscribed and you want to see more quality content such as this, as well as me go live every day during my midday market recap, then I certainly would appreciate a subscription. If you're interested in joining my free trading platform at WeTradeHQ.com, the link's in the description as well. I also run a 9 to 10 a.m. Eastern Time mentorship every single day where I help people learn and really get that edge on the market as soon as it opens. So all of that is down in the description below if you're interested in checking that out. Guys, as always, I will see you all before the bell, and B Smith is out.